Our focus remains on the ongoing reaction to the latest interest rate decision from the South African Reserve Bank as it continues its efforts to taper high inflation. The expectation now is at least of one more repo rate increase this year, and the pressure that will have on the economy as well as consumers. Lead economist at KPMG, Frank Blackmore, joins us to expand on this discussion. Thank you so much for your time, Frank. Many analysts are now, as forward-looking is where we are going, have forecast that at least one more interest rate hike is expected in South Africa. We saw the recent 75 basis point hike, and two members of the MPC having wanted it to be 100 basis points. What is the near-term outlook here?
I think the near-term outlook is best summarized in the word uncertainty. It also came up in the governor's speech yesterday, where he announced the 75 basis point increase. I don't think anyone in the global economy is too sure of what will happen over the next few months. We have the uncertainty of the war in the Ukraine. We have the uncertainty of winter arriving in the northern hemisphere and what that impact will be on prices of oil and gas. We have the uncertainty of Eskom and how many days of load shedding and what severity we will have in South Africa. We have the uncertainty of wage negotiations. So there are a lot of factors that could impact what the outcome potentially could be. But I think if most analysts are speaking from this point of view, with the understanding that we don't get any more shocks in the economy, then we're still probably due another 25, 50 basis points to get us back to sort of where we were prior to the COVID pandemic. So under usual circumstances, we would have moved up from a sort of long-term or stable level of interest rates to higher levels of interest rates in order to bring the economy back. That has happened here, but it should be remembered that we came from 3.5%, and that was sort of an artificially low level of interest rates due to the COVID pandemic that was instituted to get some stimulus going in the economy while we went through that difficult period in 2020, 2021.
You've put it so well in describing that 3.5% level as artificial because it was meant to buffer and cushion against the economic effects of COVID-19. And I'm also interested in finding out around a debate that is brewing where the South African Reserve Bank is seen by some quarters as being prudent compared to global central banks. And from a consumer perspective, there's a thinking that there could be more to be done so that the South African consumer is safeguarded against the current pressure?
I think it's quite clear that the Reserve Bank, I would not necessarily call it prudent, but they understand the impacts of inflation, especially on the poor. And there's no more damaging the impact than higher levels of inflation on poor wages, because obviously the buying power of those wages is eroded a lot quicker with higher inflation. So the Reserve Bank tries its utmost to keep that level of inflation low and stable as possible in order to preserve that purchasing power of the wages. I'm not sure if one could see that as prudent, but I would see that as quite conservative in the view that they're trying to conserve the incomes of South Africans, as well as keep the economy on sort of an even keel at that predictable level. What we don't want is higher inflation leading to higher interest rates and then decreases from that and so on. So you get big fluctuations in those rates because that makes it very difficult for an economy to plan. If I have a project, I need to make a return of a certain amount, and the interest rate keeps on going up and down. It's difficult for me to calculate whether I'm going to get my return on that. So it's much better to keep a stable and obviously lower rate of inflation, and our bank definitely does try and target that.
Thank you so much for your insights. That's Frank Blackmore, lead economist at KPMG, talking to us in reaction to that 75 basis point hike in the South African interest rate.